Hello once again, and welcome to Tuesdays with Lloyd's. My name is Pat Talley, Regional Director and Managing Agent Practice Group Leader for Lloyd's in the U.S. Today, we launch part 2 of our special 6-episode series focused entirely on cyber. These highly focused and condensed sessions, just 20 minutes in length, will air today, tomorrow, and wrap up on Thursday. Feel free to drop questions in the Q&A box. And always remember that these sessions are streamed live and recorded for future viewing on demand on our YouTube channel. A link to the channel will be dropped in the chat box during our discussion. Today's topic is demystifying business interruption. So let's get right to it by introducing our panel of experts. Laila Khudairi, cyber underwriter at Tokio Marine Kiln, Ben Hobby, partner with Baker Tilly, and Manny Padilla, Vice President for Risk Management and Insurance at MacAndrews and Forbes. So Laila, Ben, and Manny, our sincerest thanks for joining us today to share your expertise. And with that, I'll turn it over to you.
So thank you, everybody. Appreciate the opportunity to participate in this very interesting, session. And I guess we'll just jump right into it. What I'd like to do is take a second to kind of give our perspectives of where we're coming from here. I'm a buyer of insurance. That's what I do for a living, and hopefully I buy the right types of insurance. And one of the challenges that we have in the entire cyber world is, what are we buying? Let alone, are we buying the right types of insurance? I took a look at our insurance policy a couple of minutes ago. Not that it's the first time that I've looked at it since, but, I didn't realize that I've got 13 different options in my cyber policy. There are options that address the liability side. There are options that address the reimbursement side, and business interruption is a big piece of it. And so when I was asked to participate in this on demystifying business interruption, I said that's a really good topic. So with us is Laila from Tokio Marine and Ben Hobby from Baker Tilly. Laila, if you can just introduce yourself real quickly, and then followed by Ben, and then we'll get into the questions.
Sure. Good afternoon, everyone. Well, good morning for those in the US. Laila Khudairi, I head up the Enterprise Risk Division at Tokio Marine Kiln, within which we underwrite cyber and intellectual property.
Fantastic. Ben?
Yeah, and good afternoon, everybody. Ben Hobby, partner at Baker Tilly, based in London, but with very much a global practice. Typically, we work on behalf of insurance companies and their policyholders to help quantify the business interruption losses coming from a cyber event.
Fantastic. So let's start off with the questions. The first question is, what is this thing called cyber business interruption insurance, and what is typically covered under a cyber insurance policy? And I'll turn that over to Laila.
Sure. Thanks, Manny. Most cyber forms are put together in a modular format, and normally the business interruption is its own module. And often ransomware or extortion is a separate module. Now that might kind of confuse people, but if I explain a little bit about the heads of coverage and the coverage within, hopefully it will help. So without getting kind of too wording-y and getting too heavy, the business interruption covers the loss of gross profit. So it's not necessarily pure revenue, because there may be some savings made whilst the system is down, but that loss of gross profit whilst a computer system is down, or sometimes for a short period of time after everything is back up and running. The policy will also cover extra expense. So that's obviously extra costs in order to fix the problem. And the extortion specific module can cover the extortion payment to the criminals if that is necessary, if that is the only choice in order to get the systems back up and running. Finally, IT forensic costs, or sometimes also referred to as breach response costs, any additional costs in regards to hiring specialists in order to remediate the problem. So those are the key areas of coverage.
Thank you. Now, Ben, from the perspective of your side, you have to interpret this to kind of give the good news or the bad news to clients. I mean, can you give your sense of how to explain that particular issue that Laila just spoke about?
Yeah, I usually break it down into kind of simple terms, because ultimately what business interruption is ensuring is the profit and loss account. Now, we can get ourselves into a whole schmozzle on definitions like gross profit, net profit, fixed costs, variable costs, and so on. And largely, an awful lot of that terminology is brought in by accountants because the fact we did 3 years worth of exams and it's job protectionism. The way in which I simplify the profit and loss account to either to a non-accountant or to non-insurance specialists is say, look, it's a collection of revenue transactions on the one hand, collection of cost transactions on the other. Revenue less costs, that's your net profit. And what we're looking to do as forensic accountants is to understand how those revenue and cost transactions have changed compared to where they were expected to be, but for the insured events. And then check those changes against what the policy wording is saying, just to make sure that the policy would actually respond to those issues. Effectively add that together, and that's the indemnity that we're coming up with within the policy. Now, there's an awful lot of analysis and work that goes on behind all of that, but I think in simple terms, that really sums up what we are trying to do.
Well, thank you for that. So, Laila, I just have a follow-up question on your introduction. When we talk about modular portions of the policy, is the policy the type where you can select certain modules and not others, or are the modules interdependent on each other?
Yeah, more often than not, the insurer will allow the client to choose which modules they would like to purchase. And most commonly, we see insureds purchasing either all modules or just the liability modules or just the business interruption. So it depends on the exposure that the insured faces.
Got it. And only because I was just involved in a similar conversation on another topic. There are business interruption coverages on the property insurance side that overlap or don't overlap in some cases. I mean, can you spend a second as to what your perception is as to any potential overlap between the policies?
Yeah, so a property policy will usually require property damage to have occurred and will cover the ensuing business interruption following that property damage. A cyber policy does not require property damage. It requires either an outage of the computer system, so a failure of the computer system, or the inability to access your data. So it's more intangible, and I can understand why it may at first glance seem confusing, but it really is that non-property damage business interruption exposure that companies now face, given our reliance on data and computer systems.
Thank you. So, Ben, let me pick on you for a second. So if you have a situation where it's not necessarily black and white, or it could be concurrent type of issues where it's a physical damage and non-physical damage without my terms, where it could be under the cyber or it could be under the property, how does that help or hurt in your adjustment, psychology?
I think in that type of scenario, that's where I'm going to play that I'm the numbers guy card and defer to the lawyers. I think usually, in practical terms, in my experience, a property policy is usually quite clear that where there is a cyber trigger, it's usually not something that the property policy would pick up. I would actually just take a step back and say, look, what are these, as Laila I think has already alluded to, what are these policies designed to do? Property policy is designed to deal with physical damage to bricks and mortar. A cyber policy is concerned with data. So for me, data is the lifeblood of any company. I think we all know that now. We've all experienced that over the last couple of years. But what the cyber policy is looking at is the inability of the company to use that data because, as Laila said, of an external cause such as a hacker or a ransomware or something related to that. But it's that inability of the data to move around the organisation in a normal way. Where we've got that, that's where a cyber policy is going to pick it up, and that's what we would be looking for as forensic accountants.
Fantastic. Thank you very much for both clarifying and zeroing on those issues, because those are very helpful for persons like myself that are looking to buy this this product. Since you guys see the ugliness that happens in the world here, can you kind of identify the types of business interruption losses that actually have arisen in your experience? And I'll pick on you, Laila, to start off with.
Yeah, sure. So we see both malicious and non-malicious. So ransomware has been in the media a lot in recent years, especially from 2019 onwards. And certainly we have experienced, and our clients have experienced, many ransomware events. But it's not the sole cause of business interruption losses. There are also simply mistakes made in the operation of computer systems. And that can also result in a business interruption to the company and can be covered by a cyber policy. In terms of the type of losses we see, the way they play out can vary quite dramatically from one industry to another. So a manufacturing client versus an online retailer versus a healthcare or a hospital, they will have different sort of ways that the losses will come about, and also different durations, I suppose, dependent on causation also. But the common themes are the extra expense spent in order to fix the problem, and the calculation of the BI, which Ben has kindly helped us with many times, where there is actually a lot more commonality than you might think.
So Ben, picking on you with this issue, is the analysis that changes by industry groups, a type of claim, does that cause you any concerns, or what should we take away from that particular issue when we're looking at it from a broad perspective?
The industry type doesn't usually cause us any issue. I always come back to one particular mantra that anybody who's heard me present before will have heard on many occasions. It's understand the business, how it operates, how it uses the data within the organization to manage and control operations, how it generates revenue, how customers have reacted to the incident, what are the operational workarounds that business is undertaking to try and keep business going during that period while the systems are being recovered and restored. So that first meeting between me as the forensic accountant and my team and the insured is absolutely critical to understand what has happened, how the business is responding, and then how are we going to try and quantify that loss. Without that conversation, we can look at a bunch of numbers in a spreadsheet, but we haven't got context. And the context of that narrative is absolutely key to getting to the right answer.
Oh, thank you. So I'll move on to a next question. It says, how can businesses manage and mitigate, business interruption losses after the event occurs? And I'll start with you, Ben, from the perspective of big picture, and what you see literally when you walk in that door and everyone is running around in circles because they push the button and something's not working, or it hasn't worked the same way they're expecting it to, and they're all the Chicken Little type situation there. So what I'll do is I'll turn it over to you. How would you respond to that?
I think the files where the insured gets the best outcome in terms of minimizing that business interruption loss, it's not because of what they're doing after the incident, it's because of what they've done beforehand, in that they're prepared to be able to deal with that particular incident. So in real simple terms, from a business interruption perspective, the insured has identified what are the key IT applications that are required to generate revenue. What are the servers that those applications actually run on? And therefore that then becomes the kind of the prioritized restoration plan. So the business knows what they need to do in the hopefully unlikely event of an incident occurring. But not only that, they've also got an idea as to how long it's going to take for those systems to get back up and running. So therefore, what are you going to do in the meantime? What are the workarounds? I think all of us are on this call are old enough to remember pen and paper as a form of actually recording transactions. Go back to first principles. If you need to go to pen and paper, do so. That will keep the business up and running and allow you to at least partially service customers while you're waiting for the IT guys to do their thing.
Got it. Now, Laila, being presented with that situation, it's mitigating risk and mitigating incidents. What do you look for from a customer when you're evaluating or underwriting them, as far as their platform is concerned?
So I think to Ben's points just then, what is the plan B? What is the plan C? Those are certainly very important. In addition to clearly the technical security that's in place, what investments has our insured made into trying to prevent these situations? Now, we all know that even those with the best cybersecurity can sometimes fall to attack of some very sophisticated cyber criminals, but the technical security will be a key underwriting factor.
Well, thank you for that. There is a question coming out from the group here. It's from Kevin, and his question is, what would you advise a business to do where the cost of risk transfer is almost equal to the cost of improving resilience of the infrastructure? In some cases, an entity cannot do both. How would you reply to that, Laila?
Yeah, I mean, that is a difficult question to answer. And I suppose in an ideal world, you would put aside budget for those critical security updates. I think those are absolutely essential. And buy the insurance or reinsurance for those situations where that security fails. And it's not always a security fails, but maybe employees, people make mistakes. That's a fact of life. So ideally, I think prioritizing the spend, because to invest in all of the cybersecurity updates available often isn't financially realistic.
Understood. So, Ben, going to you on this particular topic, since you see the ugliness of what has happened, et cetera, and I'm sure you hear clients complaining of, well, we bought that product or we bought that service or we put this into place. What do you take away from that question, from the perspective of the investment that's made to mitigate, and how profitable it is to, in actually mitigating loss?
I think a business needs to understand what its cyber exposure is. We're now in a situation where you can't put the genie back in the bottle. Data is critical for any business going forward. That is going to be the same, and if anything, it's going to accelerate going forward. So, what are the exposures, and what are the investments that are then needed to protect the business? Certainly in the current market, I think any business needs to do that to make sure that they can get covered. But if they've got a good understanding of what their infrastructure is, what are the controls around weak points, how are these issues monitored, what does their incident response look like, you can then get an understanding as to, well, if we spend our money here in this particular part of the network, what does that do to our PML? What does that do to our period of recovery? What does that then mean from an insurance perspective? Are we able to actually get cover for a lower premium? And if we can do that, then you can start to measure a return on investment, because actually the business is being better protected, and there are benefits for doing that. So I would view that exercise as being very much part of the risk management process, irrespective of whether insurance is available or not.
And that's a very good, segue into a question I'll ask myself, which is, how do customers handle these issues? And I'll give you a perception from this side, because we're always listening to the trade press. We're hearing what happens with Maersk, with Petna. We've heard, when this first started, where cyber was a baby product, a decade ago, and it was just about loss of personally identifiable information. I'm always struggling and scratching my head and saying, where's the next thing coming from? And is, number one, does the product give us what we need? And number two, am I keeping one step ahead of the trend, so to speak? And when we get to the underwriting process, we get these applications. And, the worst thing for a risk manager these days is to have more than one carrier competing, because there are two different applications. And in some cases, the overlap is very small and the questions are very broad. So Laila, me presenting that as a complaint to you, what's your perception of the applications and the information you're requesting? Because in some cases, quite frankly, it is a little burdening.
So the questions we're asking are as a direct consequence of the claims we have seen. And I fully appreciate it must be difficult from the buyer's side to receive all these different sets of questions from various insurers. And we may find, over the next few months that there more commonality is achieved. I don't know, we shall see. But they are as a direct consequence of the claims. So they unfortunately are a necessity and likely here to stay for a little bit longer. But we're always keen to work with our brokers and our insureds to make that process as painless as possible.
Yeah. Well, one thing that we find that helps us very much is to actually have a direct conversation with yourselves to really talk about our risk, because I find that there is no commonality, even within companies within the same industry group, but there may be similarities. There's a lot of difference between the two. My last question would be to Ben before we wrap this up is, Ben, in our conversations, we talked about, how can risk managers or service providers or companies that have this exposure kind of do a test fit as to how this works. And you mentioned that there are avenues where we can approach a company like yourselves to do kind of an analysis of loss. Can you kind of expand on that issue?
Yeah, I think the pre-risk side of things, given the current state of the market, is actually quite important, and I think part of that will actually help deal with what we've just been talking about in terms of proposal forms. I am aware of one particular risk that was presented in the London market where the insured completely ignored the proposal forms and put in a 90-page PowerPoint slide deck that set out what their infrastructure looked like and documented that. The controls around various weak points they had in the network, say you've got unsupported systems and so on, how that was potentially protected and sandboxed. The monitoring controls that they had in place to look at whether they were suddenly about to be targeted or there was unusual activity on the network, what the incident response would look like, how that then manifests itself into the financial loss, but also what the future investment strategy was, and all of that information pulled together into a single source of information as a presentation into underwriters is going to be invaluable from Laila's perspective, but also is part of that process of the insured themselves getting a detailed understanding of what their exposures actually are. And that's not something that I think most companies actually have the expertise in-house to do. The advantage we have is we see things when it goes wrong, so therefore we can help bring that knowledge back in to help almost on the prevention side.
I really appreciate that. So this whole series was intended to be kind of just teasers, and this group, as you can see, can probably talk forever. But we all have different things to do, and hopefully, we got that message out that this is not a very simple topic. Demystifying is probably the right way to describe this topic. But, Laila, I'd like to thank you. Ben, I'd like to thank you. And, I'd like to turn this over, back to Pat for his closing comments.
Thanks very much, Manny. Yes, I really want to thank each of you again for sharing your time with us today. It was absolutely a fascinating discussion, and as you said, I think we could probably go on for hours, and it would never lose its interest or appeal. So thanks very much, and that will do it for today. Be sure to join us tomorrow at the same time when our cyber topic will be physical damage. And our guests will be Jillian Anderson and Sebastian Hyun from SCORE and Kristen Peed from CBIZ. Please take a moment to answer the survey questions that will appear in your browser as we exit. And until tomorrow, a big thank you from Lloyd's for staying in touch, and have a great rest of your day.
Fantastic. Have a great day, everyone. Thank you.